On today's episode, we are joined by Chad Hall of RT Specialty. Chad and RT have won many industry awards for being a top wholesaler in the country. Today, Chad shares how his personal health journey led him to always be focusing on creating positive momentum, how AI is influencing underwriters in your pricing today and in the future. Please enjoy this episode of the Advocator Podcast. Today, we are joined by Chad Hall from RT Specialty.
So RT Specialty is a nationalized global wholesale brokerage, both MGAs, MGUs, specialty products, as well as wholesale brokerage per the Ryan Specialty Companies. We were founded 15 years ago and, continue to have great success in the business. And so my side of the business, I'm in the wholesale brokerage side of it, specialize in construction, and run a large team out of Tampa, and deal with a lot of retail brokers all over the country. And we have been doing it for 15 years. Prior to that, I was in the retail brokerage side, and then prior to that, underwriting. So got a diverse background in a lot of different parts of the business. I was actually even a contractor as well, so grew up in the business as a contractor. My family's in the construction business. One of the things that drew me to insurance is with a construction background is I could immediately go into a space that I had a lot of interest in, a lot of education and passions about. And so there's a direct correlation to finding these areas that are either were your hobbies or your interests, and then being able to translate that into a path in the insurance sector, which is kind of cool. So our business is built a lot on those niche and those specialties. So we have a lot of industry practice focuses that, if you're coming into the business, you can pick those desired courses and really kind of build your career.
I think most people in the insurance business are related to the business. They don't wake up in the morning when they're a kid and say, listen, I want to be in the insurance business. And then most people find it kind of by accident. There are a few schools, so ironically, I've learned that they actually do have the specialties in there, and people could start to get a little bit of education on that. One right here in New York, St. John's has a good program, which is an interesting thing I never knew about. But I always find it interesting to hear people's journey, how they got there, and I was a former contractor as well, so I'm not surprised that we're both talking about construction and risk and insurance and kind of how those are also together. And two things that the world doesn't go on without. And it doesn't go on without banking, and it doesn't go on without insurance. So it's a couple of things that you're always going to need. Thanks for joining the Advocator Podcast. Stay tuned for more from Chad Hall and how his personal health journey led him to always be focusing on creating positive momentum every day. How exactly claims influence what types of insurance rates you're going to receive on your quotes. Also, how AI is influencing underwriters in your pricing today and in the future. What's really key about understand that dynamic is, I think, the wholesale world, your world, a lot of times they don't even get to see or know you even exist. You're like behind a curtain, so to speak. And that's just because the retail broker that everybody has a relationship with, is the face of the transaction. However, what's really key, which is why I really wanted to get us together, is number one, you're with RT Specialty, which is one of the largest wholesalers in the world. Number two, you see the types and volume of deals that you see is really almost unparalleled. And then so you have this really unique view. You can provide a very unique perspective on what happens for a contractor, and a contractor. And a lot of our clients are contractors. They're in real estate, all kind of high risk. They have commercial fleet, large fleets. All of those sectors right now are under tremendous, price stress, and that price stress takes it out of the Travelers, the Hartford, and it puts it into that surplus and excess for the E&S market, which is ultimately where folks are accessing you. But you get to see this at scale, so you get to see what works and what doesn't work. And so a lot of times when I speak to customers, there's a lot of unknown. They always feel like the insurance process is a little bit of a black box. It's behind the scenes. It happens to them, not with them. So when I think about that, and I think about, kind of how that plays into it, I've heard you say that, when insurance costs get higher, you need to look at it as, are you an insurance user or not? Meaning, do you have claims, right? Because no one uses insurance if they don't have claims. So the first and foremost, if you're an insurance user, it's likely that your insurance costs will go a little bit higher, right?
So I'll step back just a little bit.
Yeah.
So you've got two challenges that exist within, say, the construction space, depending on what part of the construction space that you operate in. One is the class that you operate in, right? And insurance carriers look at class as a business and the profitability of that class. So sometimes it's not always about singling out an individual risk. It's about that you reside in a class of business that, as your peer group as a whole, isn't performing well. And it hasn't been a profitable class of business for the insurance carriers. So let's kind of start there, and we'll go back to the individual insured. So there's some classes of business that are just tough, right? They're just, they're very tough to insure because there's either a lot of frequency of loss in that space, or it's a very severity-driven class, right? So as you get into heavy trade contractors, especially in certain jurisdictions, as you get into a lot of heavy residential construction, there's losses in those classes of business. And so a lack of capacity will exist in those classes that have a ton of frequency of loss, and the capacity will also tend to not exist as plentiful where there's high severity of loss. And so price can be driven in the classes based upon those things. And so you'll see carriers that tend to flock to what would be less riskier class of the business, right? And a lot of the interior trades and things of that nature are going to be less risky than the guys working in concrete, that, building the superstructure of the building. There's more significant exposures there, and as a result, because there's a lot bigger losses in those spaces. And so sometimes you're fighting uphill regardless of how good you are as an individual insured. So that's why I wanted to step back to say, look, sometimes you're faced with a challenge in the class where insurance carrier can't write the class at all, or they're hesitant to because of the overall profitability of that class. And so as an underwriter, they're trying to explain to their management why they would want to enter a class, or it could be a restricted class and they're looking for an exception, all right? And so that's when we start to dive down, let's say, into the individual risk. Mm-hmm. And when they're underwriting the individual risk, and how does that particular risk compare to the peer group, to the class or list, where you're trying to differentiate yourself from your peer group. And if you're in a tough class of business where you already kind of have the chip stacked against you because the industry as a whole has lost money on your class of business, you have even more of more work to do to explain how you're going to be that much different than your peer group's class. You're going to have to be able to explain how you fall out of that anomaly with the insurance carriers. And some of that comes from transparency and being able to share more data. A lot of times we can kind of like stick, we see risk want to stick to the standard of only sharing what they have to share, versus putting in the work to go way back in their history and to really show that they've had the ability to manage risk and be profitable for their insurance carrier partners over a long period of time. In any business relationship, you're doing business together so that everybody can be profitable. And if everybody's not profitable, and that the relationship's one-sided in a way where you're an insurance user and you continue to be an insurance user, that means the insurance companies are not making profit in the relationship and they're going to exit.
If you're an insurance user, but you're expecting rates as though you're not an insurance user, eventually you're not going to have a partner at the other side of the table. Mm-hmm. And that kind of leads to something we've talked about in the past, which is you take something like residential construction in Florida, where a series of losses in a sector, like you said about a peer group, it leads, insurance carriers are not going to be creative. They're just going to leave. Mm-hmm. And then when that happens, and that's not about your business or my business or that insured, it's about something that's happened at a macro level. Well, now that that's happened, what's the equal and opposite reaction to that? Well, there's less carriers around that are writing it, which means now they have less capacity to spread around, which means their cost to give that capacity is going to go higher. And now at the end of the day, you have average premiums up in a sector that may have nothing to do with a particular company.
The Advocate Association. Calling all small and mid-sized businesses, the Advocate Association helps you cut costs, improve safety, and grow smarter. Through education, advocacy, and exclusive member benefits, please visit us at theadvocateassociation.org. Our members are saving on things like health insurance, auto insurance, workers' comp insurance, auto fleets, legal, accounting, software, IT services, building supplies, and more. Again, please visit us at theadvocateassociation.org to find out more and to join.
Like New York, for example, was a good example of that because you started where you could write wrap-ups for $250,000, deductibles, and then it went to 500, and then it went to $1 million, and then it went to 3 million, and then it went to 5 million, and we even got deals where the insurer's taking $15 million of retention on a New York construction project. Nobody's doing that because they want to do that.
Right.
The market forces it, and so there's, the capacity exits, and then they move their attachment up, and it becomes a big level of self-insurance. And so as you start to see a market contract like that, insureds need to start thinking about their, the financing of risk versus risk transfer. So risk transfer, I'm giving the carrier all the risk in exchange for some, partial premium on the ultimate risk that exists. And the insurance carriers, it's fully on them for profitability, right? That they priced it right. Once we start going into risk financing or self-insurance type structures, it's about the insured managing the profitability through us, and because all the risk is on them. And they put that risk back on the insurers to say, it's on you. The accountability is 100% on you. I cannot insure this. You need to control this. You need to make sure that your subcontractors, they're not saying this, but by taking the force of the self-insurance, now that you have to do it. And so for you not to be bleeding unnecessary expense, you've got to make the investments in, solid safety programs and solid return to work programs. And the sooner you can start to implement those things before the market exits, the more advantage you have over that marketplace, because you'll be one of the first to the table. Because what insurance companies are looking for right now in a class they don't want to write is, which one am I going to pick? Like, if I'm going to do this deal, what particular characteristics and a risk am I looking for? And so the insureds that are not doing certain things are going to be less desirable to deploy that limited capacity than those that are.
No question. And I think about two things that you mentioned relative to that. One was return to work, quality, safety, loss control, that dynamic. And the second one was quality assurance, or in some senses, called kind of quality control, which I've seen more general contractors, carriers kind of look for that kind of stuff. And then the other thing you mentioned is, which I wanted to tie back to, which was self-insurance. And for a lot of folks, they hear these words, they're buzzwords, and they don't necessarily know kind of how they attach. And like self-insurance, another form of self-insurance is deductibles and retentions.
Mm-hmm.
And what minimum deductible retentions are going to be offered in certain scenarios for you to even be able to get a rate that is even remotely affordable. And then you got to talk about, okay, so that's what I need to do from a skin in the game standpoint that I have to have. Okay, so now I have skin in the game from a dollar standpoint. And then it's, well, now that I have skin in the game, how do I protect that skin?
Yeah.
Right? And I'm protecting that skin through quality control programs, quality assurance, quality of craftsmanship, right? And then the second piece of that is the safety and loss control and whatnot, and kind of like how that works within the confines. And like you said, it doesn't always pencil out. If you just proactively say, okay, well, listen, I want to have a quality control program, I want to have a safety program, I want to have a loss control program, I want to have all this stuff, all you get are zeros that add to the end of your project. And now you get to turn around, or even if it's your practice and in just your general annual policy, now you get to turn around and say, well, how am I going to get that money back?
Mm-hmm.
So to your point, looking at it from a different perspective, particularly in these challenging markets, like if we're just insuring law firms, well, that's white collar. We know what that risk is. It's very easy to predict. There's plenty of carriers who want to write that. But if we're talking about concrete or plumbing or excavation or superstructure, now it's like, all right, well, I have to put skin in the game, and how do I manage that skin? And then putting those things together, having the foresight to say, okay, I'm going to have to spend some money to protect some money, and this is how it's going to work out. I think you really need to pencil all that out. And unfortunately, there's not enough folks that have experience in all of those areas.
Mm-hmm.
You'll have my broker says, okay, this is the best. Chad is the best.
Mm-hmm.
And Chad has the best market. And ADC Insurance Company is the best. So I've done my job. I got the best broker. I got the best retailer. I got the best access. We're good. Well, now that carrier comes back and says, well, the only way we're going to rate this is if you have X amount of retention deductible. Now I got skin in the game. Oh, I didn't think about that. And then, oh, by the way, in order for you to do that, you better make sure you have quality control. You better make sure you have loss control. And you're like, oh, I didn't think about that. I thought I heard the team. So I pushed the buttons and I'm going to get the result. And really going out to pencil all that out, really evaluate what you're doing before you do it. Because 25 years ago, you could go buy insurance for this stuff, and that was the move. I'm going to buy insurance, push the button, cut the check, I'm good. Now, in order to be in position to buy insurance, you got to have all these other boxes checked. So really having people around you who have the experience and the specialty in what you do to really be able to share with you, it's not just buying the product, it's all that kind of goes into that. And I think when I tie that together and kind of some of what you were like alluding to, I'm thinking, all right, so if that's going to be the dynamic, and now you, Chad, along with your team and the broker who brings you the opportunity and introduces you to the insured, I've heard you say that every submission that gets to the underwriter is the broker's best client, is the best in class. And so if that's going to be the case, if I'm an insurance underwriter or a carrier, and every submission I see is supposedly the best, right? Quote unquote, the best. How do I, if I'm an insurer, if I'm an underwriter, how do I differentiate the difference between this deal and that deal? And so in your opinion and your kind of viewpoint and seeing this all the time, what is, in your estimation, the difference maker?
Yeah. So, I mean, transparency is the number one. There's so many cool things that you can do at the click of a button today, but really like loss analysis. Today's standard submission, somebody sends a 5-year loss run, a standard application, maybe a supplemental app. I mean, you're just not really leading the underwriter into a lot of depth into how your business runs and what makes it unique. And so the ability to actually really tell the story, for the insured to invest the time to tell the story, to get the underwriter bought into that. But, even the bigger thing with that and the relationship side of the business means so much. The computers can only do so much. They can screen information. They can summarize things for you. They can't necessarily make decisions, right? So humans still making the decisions, and there's still a relationship factor associated to making those decisions. So, meeting your underwriters, building a relationship with your wholesale broker, understanding the parties of the transaction, and, to some degree, humanizing the transaction so that everybody's vested in the long-term well-being of all parties. You've got to surface who those parties are and try to build that relationship. So the transparency, getting ready for the AI movement in regards to how things will be underwritten in the future.
If I think back to 10 years ago, a lot of the way brokers and customers would look to buy their insurance, it was, I'm going to give the carrier as little as I have to. If they're asking for loss runs, why do they need 5? How about 3? I had 3 good years. I didn't have 5 good years, right? Or if we give them 5, why do they want 7, right? So take an offensive approach to that. Give them more, so there's more transparency. Give them more and prove that you're best in class. Okay, if you vet your subs, prove that you vet the subs. Mm-hmm. That should be part of the submission. If you're really safe, prove that you're safe.
This break is sponsored by Advo-Cator Risk Management. Running a business comes with risks, but you don't have to face it alone. At Advo-Cator Risk Management, we specialize in tailored risk management solutions that help you protect what matters most and lower your risk costs, things like insurance and deductibles. We have saved our clients millions in industries like construction and real estate, transportation, healthcare, service companies, and more. Our team helps you navigate challenges by reducing exposures and having custom solutions for your business. Don't wait for crisis to find the right support. Visit us at navigatorrisk.com and take control of your risk.
AI is coming into our world. You know, if we're talking about the advancements of technology, be it AI or other, and how insurance companies are going to be using that, what do you think the future of AI is in carrier or underwriter's perspective?
Yeah, I mean, I think it's going to make it so insurance carriers are underwriting a lot more depth, because they can essentially pre-screen the hot points that they want to take in or to divulge out of the information. So, for example, like in construction, a lot of the issues, or I'm going to say issues, but one of the key pieces of underwriting information that we use like a geotechnical report.
Okay. Yep.
Not all underwriters are
Proficient?
well, they're not geotechnical engineers, right? I mean, they may have loss control departments that can look at this stuff for them, but you can stick a geotechnical report in a AI function and say, please summarize all the issues and spit out those issues. And so it's going to allow them to catch things to a degree they may have not caught before because they weren't reading through all these documents, right? And so, now if all of a sudden the geotechnical report's spitting back like issues with water levels and, settlement and, every underwriter's picking it up because it's so readily available, then we're going to have to explain these sites to a bigger degree. Is every site a good site? We're in some of these dense urban environments, we're building what we can build. And, the site may not always be the greatest site. And so the underwriter's looking at that and saying, I may be paying loss upon this because of the site selection, right? Sometimes, I've read geotechnical reports that say, and no matter what you do, be prepared to pay some deal loss.
Yeah.
That we can't fully correct the situation that exists there. And so the AI is going to allow the underwriters to dig a lot deeper than they have in the past. It's going to allow them to screen more information quickly. The benefit on some of the transactions, and this is where it goes back to the commodity, underwriters are buried with lots of submissions and they're trying to weed through them as quickly as possible. So if they're using AI to screen this and they're touching, here's the ones that put in this pile, here's the ones that put in that pile, just based off responses out of AI, you may never even really get a fair chance with the underwriter on that deal because you've already went into the decline pile just based on what it's screened. And so that's why I feel like we have been really ahead of this. So, we would always encourage trying to do for a long-term partnership, being more focused on the relationship and the coverage than chasing the price. But everybody's got a business to run and decisions are made to do that. Just understand that there's a trade-off associated to, sacrificing that long-term relationship for the cost benefit. And so those are all factors that we're dealing with fairly regularly.
Well, one of the things that are kind of a commonality with a lot of the customers and the folks that we work with, heavy in the real estate, heavy in the construction space, a lot of business owners, a lot of people starting. And most people know at some point or another starting and running a business or founders, it's not an easy journey. And I think, part of what I always like to kind of touch on from those that we have a chance to spend time with is to talk about the bigger picture about, things that we've learned or whatnot. And I was, and that's something that I knew top of my head, but, a lot of people would be surprised to know or might not know of your own personal journey and recovery from cancer, and kind of wanted to talk a little bit about things you mentioned before about forward momentum and building momentum. And I think that a lot of business owners, people in business, and everybody in life can really kind of benefit from some of that perspective.
One step at a time builds the momentum. It's the marathon, not the sprint sort of mentality. And it's that you've got to have a lot of small wins in order to get to the big win. And so the small wins build the momentum to get to the big wins. And that's an analogy I use really everywhere in my life, whether that's, dealing with personal problems to dealing with, challenges that you deal with in your daily work, building a business, or just, working on a tough risk.
Yep.
You're not always going to get there easily.
Yep.
And that if you're not willing to, I would say, embrace the suck.
Yeah.
You know, if you're not willing to put the work in, and you're not willing to look at it as, it doesn't matter how big this obstacle is, but if I just keep chipping away at it and I keep a forward momentum, that you're going to get there.
Yeah.
Like, you know, we'll get through the little bumps on the way, and you'll end up, getting to the ultimate goal that you set for yourself. So, you know, that's the advice that I've always given. That's what I've been living by for the last 20 years of my insurance career, and then battling through cancer, all those things. It wasn't about what the doctors said. You know, it wasn't about, the outcome that they were forecasting. It was about, can I get through today? And in order to get through today, I had to get up with the mindset that I was going to get through today. And these are the goals I would set for myself. And those micro wins are essentially what those the momentum.
Micro wins is a good one. I mean, I think someone said to me once, and you can use this for, large challenges, how do you eat an elephant, one bite at a time. And then, I heard another story where someone was saying how their child came to them and says, Dad, I think I have an anxiety problem. Like, I'm nervous about this or that. And his answer was not, you don't have an anxiety problem. You have a creativity problem, because you're creating, or an imagination problem. Your imagination is taking you to a situation where you are seeing all the things that can go wrong, and it's creating anxiety. Well, no matter what it is, whether it's wrong or right, the only way to address it is one thing at a time.
It is.
And to your point, whether you're going up a mountain or dealing with something challenging in business or life or health or whatever, which everybody has every day, it's one step at a time. It's a hell of a lesson for you to have gone through.
Yeah, I think it helps you focus and not get distracted from all the noise that's around you.
Yeah.
Right. And that's like the biggest part of it is there's always going to be a lot of noise. It doesn't matter what the noise is, but there's going to be a lot of noise that for you to stay focused, you've got to have that path that's broken down so small that you know exactly what you had to get done today. That's right. For me, it was I wanted to live one more day, right? And so it was a little bit easier to like, all right, well, this is what I'm going to do. As you get into the work, your career aspects, the noises are a little bit different that are around you. The focus is, if I don't get a deal done at work, I'm going to live tomorrow. So it's not the end of the world, right? But you're going to take some losses and you're going to get knocked down and you got to get back up. And so it's that momentum that you're building. And it's, if you get up and keep doing it and you'll get there. So let the noise distract you. Things are going to be all right.
I remember reading a book and the person in the book was talking about how they were recovering from a surgery it was a thing that was unexpected. And so they kind of had their mind like, oh, I'm going to be doing this, and then I'm going to be okay, tomorrow. And then there was a setback. And now they wake up in the hospital bed, and the doctor's sitting there saying, I'm sorry. This is what happened. This is where we are. And, he sat there and he was like, okay, well, what am I going to do? Yeah. And they put on a whiteboard across from him that, okay, you're going to need to do, this is where you got to get to. You got to be able to do this before you leave. In order to get to there, you got to go walk every day. And in order to do that, you do this. And for him, having it illustrated into small components on a board that every day he could say, okay, today I'm going to do that 100 times and this 6 times. And that's all part of my long-term journey. It was all one step at a time, creating the momentum.
You never know the hand you're going to be dealt. You just got to know how to play the cards you have.
That's it.
And that's the big part of it. And I think that once people can embrace that and understand that, then it's not about that things are unfair to me or whatever, but it's about what can I do with what I got.
Well, thank you for taking the time today.
Yeah, thank you.
Ultimately, it was a great deal to share some perspective for those who don't get a chance to look behind the curtain and see what you deal with every day and the specialists and the level of technicality that you get to go to. I think it's incredibly powerful for those that are buying insurance to figuring out where that all comes from. And that's Chad Hall, RT Specialty.